In this video, I'm going to demonstrate a very powerful single bar setup which can produce consistent profits and, combined with the right exit, can achieve win rates of over 85%. The setup first got my attention when I read it in a book published by Larry Williams decades ago. Now, he used it to trade the futures markets, but I'm going to be applying it to the Forex markets. I'm actually making this video in response to a comment which I got on an older video which I made. The subscriber asked if I could test the same strategy which was in the older video on some other Forex markets, specifically ones which actually trended quite well, the likes of pound yen. And I'm really glad I actually took the time to test it out, because not only did I answer his question, but I ended up finding 6 more time frame and market combinations which the strategy works pretty well on. However, in some cases on some markets, I used the exact same setup, but I had to just reverse the entry rules. And I did this for logical reasons, which I'll explain a little bit later on in the video. So by the end of this video, you'll see exactly how to trade this simple 1-bar setup, which can make money in 6 different market and time frame combinations. In the original video, I done a load of testing on Euro Pound on the daily chart. Now, although I was asked to test this strategy out on pound yen, I've actually just run it across my regular portfolio of over 14 Forex pairs, which include both Euro Pound, which you've already seen, and pound yen. So that's 14 pairs, and then I'm going to use 2 different time frames. I'm going to use the original daily time frame, but then I'm going to actually lower the time frame. I'm going to test it out on the 240-minute or 4-hour chart to give us some more trading opportunities. Then at the end of the video, I find 3 markets that it works particularly well on the daily chart, and I change up the exit, which gives us a very high win rate. All the test results, which you're going to see later on, are going to be in pips, and I've run a large backtest starting from January 2008 through to August 2023. Let me first show you exactly how to find these trades and how to enter them, and then I'll show you the test results where we can find out exactly which markets make the most money using this strategy. Okay, let's look at the trade entries. The first condition which we need to see is an outside bar. And I'm defining an outside bar as the current bar has a high higher than yesterday's high and has a low lower than yesterday's low, or the previous bar if it's an intraday time frame. Next, we need to look at where this bar closes. If the close is greater than the previous bar's high, then we're going to sell short the next bar at market. But if the close is lower than the previous bar's low, then we buy next bar at market. If the close is within the range of the previous bar, so it doesn't close outside of the previous bar's range, then we don't do anything, we haven't got a trade. So it's that easy. I'll show you an example on the chart in just a moment. And I've just got there in brackets. Later on, we actually reverse these rules. So in the case of rule number 2, if the close is greater than the high of the previous bar, we won't sell short, we'll actually buy, and the opposite. Trade exits, very simple in this strategy. We're just going to have a stop and reverse. So it's always going to be in the market. If we're long, we only get out of a long trade when we get a signal to go short. When we get that signal, we exit the long trade and we enter a new short position. And then later on the daily time frame, we're going to test out the bailout or the first profitable close exit. And what that means is if we're in a trade, we look at the end of each day. If we're in profit by the end of the day, then we just exit at market for whatever the profit is. If we're not in profit, then we leave the trade running and we'll either get an exit for in profit or we'll get an exit when we get a stop and reverse entry. So it'll be an entry condition for the trade in the opposite direction. Looking at a couple of examples on the chart. The first one we see here, look at this big red candle. We see the high is greater than the previous high and the low is less than the previous low. So that's an outside bar. The range of this bar is outside of the previous bar. Now, because the close down here has closed lower than the previous low, that's our signal to go long. So we buy on the open of the next bar. Now we hold that until we get the next outside bar signal, which is here. This green bar is an outside bar and the close is greater than the high of the previous bar. So then we sell short. So we exit the long position for a big profit and we enter a new short position. Then we hold that until we get our next signal, which is here, an outside bar with a close less than the previous low. So that's our entry signal to go long. So we exit the short position and we enter a long position. So it's a dead easy strategy to follow. Let's go over to MultiCharts Portfolio Trader, where I've done all the testing, and have a look at some results. So here in MultiCharts Portfolio Trader, we have our 14 Forex pairs which we're going to test down here. They're all on the daily time frame, or the 1440 minute time frame. We've got our strategy where we're looking at, and we've done a back test. This is the results for the individual markets, and I mentioned this in terms of pips rather than currency. We'll quickly have a look through all these, looking mainly just at the equity curves. So Australian dollar, US dollar is the equity curve, certainly moving in the right direction. Canadian, Japanese yen makes very little, we won't bother looking at the equity curve. Euro pound, this is the pair that we actually tested in the first original video which I made. And that's what it looks like, just with the basic stop and reverse exit. Euro yen, pretty terrible. Euro New Zealand makes the most in terms of pips in this whole portfolio, and it's a pretty nice equity curve. So that's one that we definitely want to look at a bit more. Euro dollar doesn't make money. Pound Canadian is, what's that, second best, and equity curve is not too bad. Pound yen, this is the one which the subscriber asked me to test, and the equity curve's pretty terrible. Pound US dollar is losing money. New Zealand Canadian is losing money. New Zealand US is making a little bit of money with a bad equity curve. US dollar Canadian losing money. US dollar Swiss franc losing money, and US dollar Japanese yen is making money with an okay equity curve, not the best. So we've seen three markets: Australian dollar, US dollar, Euro New Zealand, and Pound Canadian, all which show some promise. We'll come back to these a little bit later and see if we can improve on what we've already got. I won't cover Euro Pound in this video because that's what we looked at in the last video. As with most strategies, we find that they can work well on some Forex markets, but badly on others. And seeing as pound yen tends to trend quite well, there's no surprise that this strategy doesn't work well when applied to pound yen. But what if we reverse the rules? What if this time we got an outside bar with a close above yesterday's high? We actually bought into the market, so we're buying into momentum. This is much more suited to the likes of pound yen, where it responds very well to buying in the direction of momentum or a breakout. So that's what we're going to test next. Same portfolio, same daily time frame, but reversing the rules, this time buying into momentum or shorting into downward momentum. So we're back to the same portfolio on the daily time frame, and I'm going to reverse the rules. I've actually programmed it, so we've used an input here. So if I use the input of 1, that switches on the momentum side of the strategy. So when we see the outside bar with the close above the previous high, we go long rather than short. So we're going in the direction of momentum. So let's backtest that and see how that looks. So looking through the individual markets, there's a lot of losers there. Euro dollar makes the most money. Equity curve's not great. Worked very well early years, but then has pretty much done nothing. Pound yen, this time making money. Although the equity curve isn't great. Obviously there was this spell of a few years in the middle where it did work well, but overall the performance hasn't been consistent. Pound dollar, not very good. New Zealand dollar, Canadian dollar, not that great. US dollar Canadian making a little bit of money, and US dollar Swiss franc making a very small amount of money. So overall, reversing the rules on the daily time frame, which we see here, hasn't worked very well. But nonetheless, definitely was a test well worth trying out. From experience, I know that pound yen does trend well, and I found that trending strategies typically work better on lower time frames than the daily chart. Although you can't go too low, go much lower than like a 2-hour time frame, and although the trades are very good, you're going to struggle with the size of the average trade. The trades simply don't make enough money to overcome some trading costs. So next I'm going to apply the same strategy, and we're going to be buying into momentum and shorting into downward momentum, but I'm going to apply it to the 240 minute or 4-hour chart. And this is where we see the best results yet for pound yen. But just before we look at the results, I want to first offer you the opportunity to download my 22-page Beat the Markets strategy guidebook. In the guidebook, I've listed out 3 more rule-based strategies, a little bit like we're seeing here today. You'll get all the rules and all the test results. And the good news is, if you find the link in the description down below, at the moment you can get it absolutely free. For those of you who've already got the guidebook and you want to learn more about rule-based trading, then you should check out my popular trading course. I know it's helped out a load of you guys already, amongst other critical information about rule-based trading. I actually give away 6 more trading strategies in the course for you to take away and do what you please with. And the links for the course are also in the description down below. So let's go and continue the testing, looking at the 4-hour time frame. So this time, the same portfolio of markets, just looking at the 240 minute or the 4-hour chart. And you can see from the input, we've got the momentum trade input set to 1. So we're still trading in the direction of momentum. So let's look at the backtest results. Australian dollar, US dollar is making money. Equity curve is not great. Canadian, Japanese yen making a bit of money. Equity curve's not great. Euro pound losing, Euro yen losing, Euro New Zealand losing a lot of money. Euro dollar making a little bit of money. Pound Canadian losing a lot of money. Pound yen making the most money. So 16,000 pips. And that's what the equity curve looks like. So that's not too bad. Looking at a close to close, we can see that this is definitely moving in the right direction. We've got an average trade value of 18 pips. So by the time we've paid costs, there's still going to be a big chunk of profit to be had here. Percent profitable, 46%. And we've got 875 trades over that period. Pound US dollar making a little bit of money. New Zealand Canadian losing, New Zealand US losing, US dollar Canadian dollar losing, dollar Swiss franc is pretty much losing, and US dollar Japanese yen is also losing. So there's a clear winner there, which is pound yen. That was actually quite nice. The rest of them probably aren't worth considering. But we also saw some particularly bad results like Euro New Zealand and pound Canadian. So the next obvious test would be to reverse the rules back to the original rules. So this time, when we get an outside bar with a close above the previous high, we go short. So let's change the input and rerun the test. Australian dollar US losing, Canadian Japanese yen losing, Euro pound pretty much losing, Euro yen making a bit of money. Let's check the equity curve. And not very good, is it? Euro New Zealand is, what's that, second best? And equity curve is reasonable, definitely going in the right direction. Euro dollar is losing, pound Canadian is the best yet, and that's really quite a nice equity curve, considering at the moment it's such a basic strategy. Pound yen, as expected this time, is a big loser because it worked very well opposite. Pound dollar losing, New Zealand Canadian making a bit of money with a bad equity curve. New Zealand US making some money, not a great equity curve. US dollar Canadian making money, not great equity curve. US dollar Swiss franc losing. US dollar Japanese yen, not very good. So out of this test, Euro New Zealand is okay. Pound Canadian is definitely the best, and pound yen is the worst, pretty terrible, as expected. Lastly, we're going to look at 6 different charts, actually in MultiCharts. We're not using the Portfolio Trader now. We're looking at the 3 best ones on the 4-hour chart and the 3 best ones for the daily chart. We won't do anything more yet with the strategies on the 4-hour chart, but for the ones on the daily chart, I want to introduce the bailout exit, or the first profitable close exit, to see how it changes the results. Now we're in MultiCharts, we can actually see the trades on the charts, and we've got our 6 best performing pairs and timeframes. First of all, in this workspace, we're looking at the 240-minute or 4-hour chart. Let's just remind ourselves, we've got pound yen here, and we're trading in the direction of the momentum. And you remember, that's what the equity curve looks like. We've got pound Canadian, which is trading the opposite to momentum, like the original strategy. And that's what the equity curve looks like. Did we look at the average trade value? No, we didn't, but the average trade value is 16 pips. So again, by the time we've taken out some costs, we're still going to have a winning strategy on our hands here. Percent profitable is 60%. And lastly, Euro New Zealand, and again we're trading against the direction of the momentum, like the original strategy. Average trade of 14 pips, so that's okay. And there's what the equity curve looks like. But let's look at the daily time frame. We've got our 3 best performing markets here. We've got Australian dollar US, Euro New Zealand and pound Canadian. And this time all of them are trading in the direction of the original strategy, so against that short-term momentum. So let's just run through and look at the baseline equity curves. Australian dollar US dollar, Euro New Zealand, that's pretty nice, isn't it? And pound Canadian. Now what I'm going to do is, one by one, switch on that first profitable close, or that bailout exit, to see how things change. So firstly, Australian dollar, US dollar. And I programmed an input so we can easily turn on the bailout exit and test it. And you'll see now on the chart that we're in trades for a very short period of time for most of these trades. We literally get in them. We're in them for about a day or so because they move into profit very quickly, and then we exit the trades. So looking at the equity curve, that's pretty bad, isn't it, for Australian dollar, US dollar? That definitely hasn't done us any favours. I suspect we're just staying in the trades for too short a period of time. But there is something we can do to combat that, which I'll talk about in a moment. Next, let's look at Euro New Zealand. Let's turn on the bailout exit. That's what the equity curve looks like. Again, not very good, is it? Nowhere near as nice, or nowhere near as smooth as using just the stop and reverse. And lastly, pound Canadian. Let's switch that one on. There's what the equity curve looks like for that one. And that's definitely the best for the bailout exit. Looking at the total trade analysis, we've got percent profitable just over 85%, and we've got an average trade, which is huge, of 48 pips. So with just the regular bailout exit, pound Canadian responds the best by far. And don't forget, in addition to this, we've got the euro pound, which we extensively tested in the previous video. Now, because the bailout exit was a bit disappointing on both the Euro New Zealand and the Australian US, what we could do is, like we did in the original video, we could introduce a day delay, which is something that I often do. And what that suggests is that, let's say we have to be in the trade for a minimum of 4 days or 4 bars. So we can't exit within 4 bars, but then after that 4th bar, then we can start looking, are we in profit? If we're in profit, we exit for a profit, and so on. We use the regular bailout exit, but we have a minimum duration period. That can work really quite well, and I suspect that might drastically improve the results, especially on these 2, Australian dollar and Euro New Zealand. But I'm not going to cover that in this test. That's going to be for another test. So I hope I've been able to answer the question on my older video by running a lot more than just the one test on pound yen. And in the end, we've ended up with another 6 potential strategies from just that one simple outside bar setup. Of course, there's a whole lot more development which I could be doing. We need to introduce a stop loss, look at some different exits, maybe introduce some trade filters. But at first, I just wanted to test that basic strategy, and that's exactly what I've presented to you in this video. I hope you've been able to learn something, and I hope you can take away some of the ideas and the tests and make some money with them in the Forex markets. Anyway, that is all for this video. If you've enjoyed it, please give it a thumbs up and consider subscribing for more videos a little bit like this. Hopefully, I'll see you next time on the next video. But until then, this is Jared Goodwin, and thank you.